Hello, good morning, everyone. Hope you're all in good health and well. Before I start, apologies again for canceling the trading economic news last week, Friday. But like I said, I'll make it up this week. We'll have another session this week, which we'll discuss later. So as usual, this Tuesday morning sessions, number one, gives anyone an opportunity to present or try and analyze the markets for us. As they say, practice makes perfect, and it's just an avenue or an opportunity to try out analyzing the market, see if you're making any mistakes. We all learn from it. So this Tuesday morning sessions gives you the opportunity to do that, and then afterwards, we'll have lots of time for questions and answers on any issues you have regarding trading and the markets. So that's what this Tuesday morning session is for. So every Tuesday morning, we'll ask if anyone wants to present. If nobody volunteers, and I'll go ahead and analyze the markets, and we take questions, and when there are no more questions, we end, so to speak. So how short or how long the session is for depends on you guys. I've taken I sort of carved out this time of my day to be available for questions. Of course, for those who have to go to work, go to your business, or have other things to do, once we've analyzed the markets, you're welcome to log off and take off once we've analyzed the markets. But if you want to stay back and ask more questions, feel free to do so. Okay, anyone wants to analyze the markets? The screen is up, so all yours.
Okay.
Tell us how we can make money today.
Okay. So the first thing I'll be doing is I'll be checking the daily FX to see what's going on.
Good.
And then also to check if there are public holidays. I think I had done the public holiday one yesterday, but I can do it again today. Yesterday,
No,
I think I'll do it.
All right, go ahead.
But yesterday was the US bank holiday, so I don't think there's anything else that is going on for today, but I'll double check just to be sure.
Yes, so, always good to double check.
Okay, so my markets are the Euro US dollar, and I'm just going to check to see if there are any high or medium. I don't really focus on medium, but let's just So I noticed before that GDP growth rate at 10 a.m.
Yeah.
And this is high. Yeah. So even though it's not the UK, but it says Euro area, that made me to think the market will probably trend sideways until 10 a.m.
Yes.
Not really sure. So that means that it,
because don't forget what market are you trading? Sorry?
Euro USD.
Exactly. So since you're trading the Euro USD, you're looking for reports that can affect the Euro and the US dollar. And as you can see, like you rightly said, the Euro area report will definitely affect the Euro, especially that GDP report.
Okay. So that's the first one, then that's at 10 a.m. Let me just see if there's anything for the US. No, there's nothing for the US. So I guess we have to wait until 10 minutes to 10, I think.
Yes, correct.
Before we do anything.
Yeah.
Okay. So does that mean?
Let's still analyze the charts. Let's see what's going on in the market.
I'll analyze the charts, baby.
Let's still prepare and see what's happening. Yes, towards
so
10 o'clock.
What's the other thing?
We're not letting you off yet.
I thought that was going to be an easy one. No. I can't remember time and date. I'm sure I have it as time and date.
No, Market Watch.
Oh, yeah. I need to check. I should have bookmarked all these things, but I have it on my personal computer. This is my work laptop, and I don't want to have to bookmark anything on here.
That's okay.
So, Okay, so we need to check market watch to see what is any. Okay, this is about stocks, but I'll just scroll down. It's still loading, so bear with me, please.
That's okay.
I can't see anything here that is. This is about US European stocks. That's all stocks as well. Yeah, I can't see anything on here that is.
Actually, let me actually talk about this a bit, because this is why when people talk about trading, like we said during the course, you can trade really any market. You can trade bonds and treasury bills on a daily basis. You can trade the stock market on a daily basis. You can trade a commodities market on a daily basis. But like I always tell people, the currency market is the best one to trade, because there are not too many things that affect the currency market on a daily basis other than the economic reports of high importance. So it makes it easier to trade, because just like you've rightly said now, when you come onto Market Watch, there's so much report on the stock market that if you are trading on a daily basis, it's a full-time job, because there's so many reports affecting individual companies, individual sectors, that if you want to trade stocks on a daily basis, that's why you find people get the bad news about trading, because it's mostly when they see people who trade stocks that are glued to the screen, glued to the news, and most people just get put off and think, oh, this trading thing is too difficult. But it tends to be those who trade stocks on a daily basis, and you can see why, because you can see there's just too much reports to be monitoring if you're going to be trading stocks. Unlike with currencies, what you're really looking for is if China has declared war on USA, or if USA has put sanction on China, or put sanction on Europe, or there's a trade war between Europe and America. Those are the sort of things that can affect currencies, big news like that. But all this, with the vaccine too, they do find a cure for vaccine that might affect the currency market too, because obviously that's big news, because the COVID-19 is causing global problems. So, but yes, by and large, it has to be a big news that would affect currency. That is actually why it makes it easier to trade than other markets. So I just wanted to emphasize that when you just mentioned this is all about stocks.
Okay, sorry, Dr. Just on the back of that, let me quickly ask. So, for example, like Russia, that they're trying out their trials and all of that. If their vaccines are valid, does that mean that their currency, they use the euros anyways, but does that mean that it could affect their markets positively? Just from your experience, this is me thinking out loud.
It's okay, actually, yeah, which is good. I think one of these days we'll have to arrange a session when we'll do intermarket analysis. Because although, yeah, actually the good point you raised there, so I'll make a note of that. We might have to do a session on intermarket analysis. But yes, although those four major markets, financial markets, are separate, fixed income securities is completely separate from the stock market is completely separate from the currency, and currency is completely separate from commodities. But there is some interrelationships between them. Not directly, but indirectly. So you might find, let me give you an example. If you find there's a huge agricultural community in America, for example. So the commodities is a huge thing in America because they grow a lot of wheat, barley, orange juice from Florida. So there's a huge, and they export a lot of commodities in America. So that's a huge sector in America. In fact, excuse me. In fact, that's why when they do the unemployment reports, like they did on Friday last week, they have the non-farm payroll. They exclude the farmers from the payroll reports. So they said non-farmers because the farming community is huge. Excuse me, I don't know, I've got dry throat. Anyway, so if you think about it, let me go a bit slowly now. So if you think about it, if the dollar is very strong, as in the dollar of the value is very high, that means the cost of foreigners trying to buy commodities in America, it will make the commodities in America expensive. Isn't that right?
Mhm.
Is that right?
Yes, that's right.
Yeah. So if the dollar is very strong, someone from Japan, China, Europe trying to buy commodities in bulk from America in dollars, it will be expensive because the dollar is high. Now, because of that, and because it's expensive, there will be reduced demand for the commodities. So that might then affect the commodities market if the dollar is high. Now, if the dollar is weak, the dollar has been devalued a bit and is weak, then it makes the commodities cheap. And because they're cheap, there's increased demand and the commodities markets go up. It's a bit like you guys know in UK, for example, when the pound is strong, people avoid UK because it's too expensive. Everything is too expensive because the pound is strong. But when the pound is weak, then you find people start to come and shop in UK. So you can see there's some, and of course, when they come and shop, that could help the stock market because they might patronize some retail companies and all that. So it's the same with the vaccine. You know, there might be, depending on obviously the country that discovers the vaccine and the country that rolls it out. But having said that, you find that Australia, Russia, America, quite a few of these countries are trying to bring out the vaccines for themselves. So you might find that there might not be a big ripple effect onto the currencies. But if it's just one country that has a good, valid vaccine that works, and it's just one country that discovers it, then yes, that country's currency might. Sorry?
I said no. They've hit gold. They struck gold if they're
Exactly.
the ones.
Yeah, and they're the only ones. But there are a lot of countries, trying to do it. So yes, there is some interrelationship, but it's not direct. But that's also just a good point for me to do a session, arrange a session to discuss intermarket analysis. But by and large, intermarket analysis, you don't need it on a daily basis. But it's just good to know that yes, there is some interrelationship between this markets.
Okay. Thank you. And then what
Pleasure.
was the other thing I was doing? Time and dates. I think
For
I picked it up already. Sorry.
For the holiday.
Yes.
Yeah.
And, sorry, I should have done this. Please, guys, just bear with me.
That's okay. Like you say, it's your work laptop. Oh, it's there. Okay, there you go.
Yeah, this is it.
It was actually showing at one of the options when you did the search.
Okay. That's probably because I've been on it before. So what am I looking for? I'm looking for holidays, calendar, holidays worldwide. And then the United States. I think I'm in the United States.
So you have to check both United States and United Kingdom. UK, yeah.
I know we don't have any bank holiday, but again, I will check.
Yeah.
So today is it's none. Well, so somewhere here, and then we had this yesterday.
Yep.
And so I think we're good.
Yeah. And UK?
Okay. Don't have anything till Christmas, but sadly so.
Which is true.
Okay, so yeah, we're somewhere here, and again, there's nothing.
Yeah, well done.
Okay.
So basically, you're free to trade, but not till 10 o'clock.
10 o'clock, yes.
But we haven't finished. Go back to the economic calendar.
The economic calendar.
Yes.
Okay. The medium news? What am I looking for?
No. We're going to add, again, this is the whole aim of the Tuesday morning session, is to just keep reinforcing some points. Because apart from looking at today, it's always good to look at the rest of the week.
Okay.
So go to next 7 days.
Tomorrow or
Next 7 days, yeah. So go through the rest of the week. I usually do this on Monday mornings. I check the whole week because it could impact actually what you're trading today. So let's see.
And is this subject to any change, or it's fixed for the whole week?
It's fixed. No, well, yeah, it's subject to change because, yes, they could actually add some more reports to it. So yes, it can be changed. That's actually another good point you raised. Because, for example, you could look at the whole week, and then later on the week you get to that day, you see something that has been added. So yes.
So,
But the major ones tend to be sort of fixed. Okay, so talk us through quickly the week. You don't have to go through in detail, but we're looking at Euro US dollar.
Yes.
So,
I'm just going to do a quick scan. I can't see anything so far for, this is tomorrow, the 9th. I can see medium for the US, but I think I'm just going to ignore that for now.
Exactly.
And then Canada doesn't really apply. So that's for the 9th. And then this is the 10th. And I'm just scrolling down to see what exactly is happening here. Again, I can't see anything for the US and nothing for the Euro area. At 12:45, there is, I don't know what this is.
Interest rate decision. Yeah. European Central Bank.
Oh, okay.
Click on the report, click on it. So like I always say, if you're not sure, you can always click on the report and read about it.
I think that's disappeared. Let's see. Okay, in the stability. Okay.
So what does this tell you?
That there's going to say it's talking about like the interest rate.
Yes.
For the euro, it would affect the market because this is the bank now. This is the central bank, like European Central Bank.
Exactly.
So whatever happens here, and then it says it's this is meant to be price stability basically to keep inflation below. So yeah, that kind of affects everything. I don't know how. Yeah, but I know that it would affect because it's a Europe, right? It's a Europe market basically.
Yeah. Okay. So go to the rest of the week. Quickly scan the rest of the week, and we're going to come back here.
Okay. Another one. Okay, so that will probably be knockoff effect of what happened earlier here, and then they have a press conference to let us know what's going on. Okay. Yep. So ideally, we can't even trade the market until this one for that day.
We'll come to that.
Okay. Okay. So looking at the US, medium stocks, and then oil change. Not really. I don't know. And then I'm on the 11th now. I'll kind of assess and then hear your correction or feedback, as it were. Exactly. So on the 11th, there's Germany. I'll ignore that because Germany is a small. But then the UK, they have the high GDP, whatever this is. Let's see. So this will be something to take note of again. GDP measures on here. Goods and service produced in the UK. So, but why do they do it every 3 months? Let's see. The 3-month growth rate. Okay, so the GDP as a monthly figure is more likely to be volatile. Okay, so they're kind of just comparing over the last 3 months. Kind of like. Okay, so that would be.
The yearly one is more important, but the GDP, the 3 months will just give you an idea of where things are going. Okay. But again, for everybody else, I think this is why it's important to read about these reports. So you begin to get familiar to their significance, what they mean, what the report is about. So it's just to make that a habit, reading about them. Okay, carry on. Anything else on that day?
I think that's kind of GDP year on year. I think that's the yearly one you talked about just now.
Yes, yeah.
Okay, so and it happens on the same day.
Yeah, we'll carry on.
So that will be something to look forward to as well. Euro area, there's a meeting. I don't know what it's about, but let's see. Euro group meeting.
It's just a meeting. So it's not a report, it's just a meeting. They're going to meet. So it's not a report.
Okay. And then the inflation rate, I think the same for the US
Yeah.
at 130. So this will be for the month, I believe, and then the year, oh no, year on year actually for both of them.
Yeah.
So those are things to take note of as well. That will be for the 11th.
Which is Friday.
And then,
That's the last trading day of the week.
Okay.
So you can stop there.
Okay.
Because Friday 11th is 11th is Friday.
Yeah, it is Friday.
And Friday is the end of the trading week. So now that you've scanned through the week and you've seen what's coming up later on in the week, how would that affect your trading today and why?
My trading today.
And why?
And
you
why?
You remember my question is always why. You always have to have a rationale of why you do what you're doing. So why?
To be honest, I don't know how it's going to affect my trading, but the only thing I can think of is that because I think almost every day we have this news that we need to watch out for, it most likely means that for those days, the market will trend sideways. And I don't know if I'm right or wrong, but yeah, that's what I can think of. And so for each of those days, it would mean that I can't place any trades until 10 minutes before.
Okay.
But then, yeah, that's all
well
I can think of. I mean, I don't know.
But I'll give you the why now, because like I always say, everything you do in trading has to be doing it for a reason. So the reason why I look on Mondays for the whole week is for a reason, not just for the heck of it. There's always a reason. Now, yes, like you rightly say, every day there's some reports of high importance which you have to watch out for and all that. But there are some reports that are more important than others. There are some high reports that are even higher than higher reports. I call them reports of mega importance.
Okay. And how do we identify those ones?
Yes, that's what I'm going to tell you now.
Okay.
Now, to start with, the four major reports that are always of major importance are Consumer Price Index, which is the inflation that you see coming out. Economists say we're ignoring German inflation. No, we're not ignoring it. We're ignoring it for looking at the week, but you shouldn't ignore it on the day. Okay, let me go back to what I was saying. Yeah. So there are four reports that are always of major importance. There are four reports that are always of major importance. Inflation rate, gross domestic product, interest rates, and unemployment rate. Those four reports are always of major importance. Now, out of those four reports, two of them are extremely important out of those four. Number one is interest rates. Interest rates have a huge significance on currencies, interest rate decisions. In fact, there are some traders that they do what we call carry trades. This is something all the institutions do. You can't do it as an individual. But institutions, what they do is that they buy cheap currency and sell expensive currencies. So what they do is, and they hold on to those currencies. So for example, if Japan interest rate is 0% and UK interest rate is 2%, then they would sell UK currency and buy Japan currency, and they just make a 2% profit because of that currency difference. It's currency carry trade. Just ignore that. But what I'm trying to say is that billions and trillions are riding on the interest rates of these countries. So when interest rate decisions are announced, they can have a huge impact on currencies. So interest rates are very, 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 very important, and currencies are sensitive to interest rate decisions. So having said that, you now find that you're now trading the euro US dollar. And on Thursday, the European Central Bank is going to announce the interest rate decision. Now, from what I've just told you, do you think there's going to be a lot of people trading currencies anticipating that report? Tolu, are you still there?
Yes, I am. I thought it was an open question. Yes, because you just explained to us that what I can't remember what you call that kind of trade, where people kind of like buy and then sell. So
Yeah.
yes, there will be like high movement in the market. That's what I'm thinking.
Yeah. So there's going to be high anticipation. That's the key word. So a lot of currency traders are anticipating that report on Thursday. And as you know, this is not like a secret. Everybody knows it's going to be announced on Thursday at 12:45. So because of that, and what I've just explained, and how currencies are sensitive to interest rate decision, then you trading Euro US dollar, you need to also be careful trading Euro US dollar from Monday till Thursday.
Okay. So does that mean that the anticipation, because if it's on Thursday, right? What are they kind of like trading before Thursday or
waiting?
Okay, so that's what I'm thinking. If they're waiting and they're not doing anything in the market, how come we can't just carry on as normal since they're just waiting?
If they are waiting, then the market will be trending sideways. And if it's trending sideways, you'll just be losing money.
Okay. I get it.
Yeah. So if you give the reason why, because if I is interested, you actually answered the question, but came to the different conclusion. Because you said if everybody is waiting, why don't you be trading? But because everybody is waiting, that's why you should not be trading.
Okay. Okay.
Yeah, but as we said, you don't use the word always or never when it comes to the market. So you will still look for opportunities every day. You will still try, because the market could move before that interest rate decision on Thursday, today or tomorrow. But because you have that in the back of your mind, you would definitely don't want to be having 3 attempts at the market every day this week prior to Thursday.
So what would it be? Just one?
Yes, 1, maximum 2.
Okay.
So you can see this is what's informing my decision. So you don't just go blindly every day having 3 attempts, having 3 attempts, having 3 attempts, just losing money. You can see this is now why you look ahead to the week. It might prevent you just having some ridiculous losses for no reason. So because I know on Thursday afternoon, there's a report that is of mega importance beyond the normal high reports of high importance on Thursday. So let's assume today is Monday. So on Monday, as I know, I've looked ahead of the week. This is why I do this every Monday. I look for the whole week. So because I know on Monday, I know on Thursday there's going to be the ECB interest rate decision. That's already informed me on Monday that I need to be careful on Monday, Tuesday, Wednesday, and Thursday before the report trading. So on Monday, even if there are no reports of high importance on Monday, I will still be careful and maybe have 1, maximum 2 attempts, same on Tuesday, same on Wednesday, because of what's coming out on Thursday. So this is the very important reason why I check the rest of the week. So you don't just go blindly every day doing 3 attempts, 3 attempts, 3 attempts. So because there's in some scenarios, just like you said, and this is why I'm going to great pains to explain all this, because you might wonder some days why I would just say, I'm just having 1 attempt at the market, and you'd be wondering, well, I thought you said we should have 3 attempts. You know what I mean? But you might see me only having 1 attempt, and I'm just going to say I'm going to leave the market alone. And you'd be wondering why, but you say, but we said you could have 3 attempts. It's because there's something coming down the week that I'm wary of.
Okay.
And this is why I checked. Last week was a good example too, because like I said, there are 2 reports that are always of major importance. So one is interest rate decisions. Then the other one is just the US unemployment rate report that comes out on the first Friday of every month.
Sorry, sorry to cut you there, but you said there were 4 before. 4 news that we needed to watch out for.
Yes.
Okay, but you just said 2 again now.
No, okay, now let me start again with what I said. There are four reports of high importance that are always of high importance. Gross domestic product, one,
Okay.
GDP.
Mm-hmm.
Inflation rate, two, that is consumer price index, inflation rate, two. Mm-hmm. Unemployment rate, three. And interest rates,
yeah.
four.
Okay.
Those are the four reports that are always of high importance. Now, I said out of these four reports, two stand out. That are,
okay, I get it.
So those 4 years are always of high importance. So for example, that US inflation rate coming out on Friday, I might not be as cautious as I am with the ECB interest rate decision. So I'm just saying those four reports are of high importance, but two are of mega importance that would even make me cautious trading even days before that report. And those two reports are, number one, interest rates. So I went in, and because that's why I went to great lengths to explain how currencies are sensitive to just interest rate decisions. So if the UK interest rate decision is due out, the US interest rate decision is due out, or the European Central Bank interest rate decision is due out, that will make me very cautious that week trading prior to that interest rate decision, because currencies are very sensitive to interest rate decisions. So that's why I said that the interest is, out of those four, interest rate decisions is even higher than those four when it comes to trading currencies. Then the second one is just the US unemployment rate. So the US unemployment rate, and I think I explained that last week. Actually, I can see you're on the platform. Go to the live Forex trading session. I can see you on the online platform. Let me show people. So click on that. So close that. So if you go scroll down to, let's go to, oh no, sorry, go to the live Forex trading group.
I think I was going to events. No, sorry, not events, topics actually, and then I kind of follow it from here.
Okay. The other way you can go is to go through the Explore group, and then you can go through that way.
Explore group. Let's see. Okay.
And then there you go. Okay, scroll down quickly. Go back. Sorry, keep going. Keep going. Keep going. Oh, hold on. Oh, I think you've gone
past it.
Yes. Go back. Keep going. Keep going. Yeah, that one. Stop.
Okay.
Yeah.
This one?
Yeah. So click on continue. So you can see, so I guess you don't follow my posts.
Some days I do, not every day.
Yeah, so you can quickly read that.
Oh yeah, this was on Friday.
Yes.
Oh yeah, I saw this on Friday.
Yeah, but on Monday, I knew about this on Monday, and I was worried about this trading the whole week leading up to Friday. But again, I just emphasize them of mega importance. And that's why I emphasize the point. I didn't even say high importance. I said mega importance. The US unemployment rate report. And this is another report that is highly anticipated. So the first week of every month, I mean, the report comes out the first Friday of every month. And it's highly, in fact, there are some traders I know, again, who trade huge accounts and millions, who probably trade 1 million per pip or millions per pip. Some of these traders, they only trade on this Friday. They just wait for this Friday report, the first Friday of every month. So it's a highly anticipated report. Everybody knows it's coming out first Friday of every month, and it's highly anticipated. So again, the Monday of that week leading up to that report, one has to be careful. You don't just have 3 attempts every day, 3 attempts. So those are the two reports: the US unemployment report and interest rates. Those sort of reports make you very wary that week trading up to that report. Okay, so let's go back to your charts now. So we've really, oh sorry, before you close this window, close this box itself.
Okay.
So you can see on the platform, I have actually set up to make up for Friday when I canceled the trading economic news. I've set up a meeting for Thursday for us to meet.
12:30.
Yes, to meet and trade that ECB report. You saw it, but bring go up to it so that you can share. I can share everybody. Go up to the top. So everyone, you can see I've now posted an event on the platform, Trading Economic News. We're going to meet on Thursday to make up for Friday, and we'll trade the European Central Bank interest rate report. And again, that's why I've set up that meeting, because that's the most important report coming out this week, relevant to the market we're trading. So we'll trade that news together on Thursday, and you can all, the registration details are on the platform now for that event. Okay, so we've massacred the economic calendar. Let's go to the chart.
I can't find my taskbar. Let me see. I think it's kind of disappeared. Oh. Sorry, I've got so many things open.
That's okay.
Okay. So to the charts. Let's see. Actually, I think I should open it up a bit more and then pull this in a little to see what's going on. What did I just do? Okay. So this is where we are.
Yes, we've got enough. We've got enough information where we are now.
Yeah.
To tell us what's going on.
Yeah. Okay, I'll kind of start from.
Yeah, start from there.
Yeah. So this was about morning, right? And then the market started. So right up until here was trading sideways, and then there was a decline, or how do you call it? The market started trending downward. So you can see the lower lows.
Yes, well done.
And then yeah, I think it's still kind of like, this is kind of like the lowest low, for lack of a better word.
No, that's the what? That's the lowest low. Yes, that's a good word. Yes.
Okay. And then from here, it had kind of like it kind of went up a bit. And then I think for me, I can say that all of this is just trading sideways. So that's
well, okay, go trade
from
system. Here. Yeah, go start from that lowest point. And let's go.
Okay, from the lowest point.
Yeah.
It had one.
Don't rush it. So go to the next high from that point.
Yeah. So it had just one high.
No, all the way to the highest point there before it fell back down.
No. So here.
No, keep going.
Okay.
Keep going. No, there. Stop.
Okay.
The one before the white candle. The one before the white candle.
Okay.
Yeah. So that's the next highest point before it dropped back down. Isn't that right?
Yes.
So that's the high point. Then it went down. Go to the low point. Good. So that's
this is low. The lowest. Yeah. And then.
So what is the next high?
This is the next high.
Good. Is it higher than the previous high?
Yes, it is.
Yeah, it is. So it's a higher high. Where's the next low?
That's the next low. Let me see.
There you go. That's it. Is it higher than the previous low?
Actually, it is.
Exactly. So it's making a higher high and a higher low. When is the next high? Go all the way to the top again. Keep going.
This is the next high.
I know, but let's just skip it.
Okay, so this is the next high.
Yeah. So that's higher than the previous. So it's now trending up. It's making higher highs and higher lows. Where's the next low?
This is the next one.
Good. Now, and then obviously it's higher than the previous one. So at that point, it's beginning to trend up. Where's the next high?
The next high from here will be this.
The next one.
Okay.
The one on the white candlestick.
Yeah. So that's where I have my cursor.
No. So you're right.
Which one? This?
No. Keep going to your right. Keep going to your right.
That's my right.
There you go. That one. There you go.
Okay.
Now the question now is that high higher than that previous high? So this is where you need your data window to check those two high points.
So let me see. That's 1.1811, And then this as well is...
It's always good to put your cursor on the
It's
body
the same,
of the,
actually.
It's always good to put your cursor on the body of the candlestick so you're sure which candlestick you're checking. That's good. So you're in the body, good. So that's 1.1811. And what's the other one? No, not that one. Not that one. Yes, the one with the white here. Because you can see the wick sticking up higher than that. So what's the high there? 1811.
1 as well.
Good.
Yeah, that's what I said. It's the same.
Exactly. Now, what has happened there?
Market resistance.
Well done.
Am I right?
Exactly. It's from the market resistance. Let's draw a line there.
Okay.
Let's draw a line there. So it's from the market resistance. So you can see this is, you're a professional now, Tolu.
Yeah.
I'm still going to try and trip you up now.
I know I'm going to fall. Actually, let me take that back. There's power in the words. I'm not falling.
Exactly. Well done. So just type high. Type high under the horizontal. Type high. And then go to parameters and put 1.1811. Now, what I tend to do is just to be extra cautious. You know, it was 1.18113. I know, but
yes, one of.
Yeah, one was.
But I ignored it. One was one.
No, you can. No, you can. But because I want to just make sure I'm well above, I just put it at 1.1812.
Okay.
Just to make 100% sure.
Okay, and then I did this.
No, 1.1812.
181.
And then okay.
Okay.
There you go. Now let's go to the bottom. So, well, you can see the market is moving down now. So it's probably broken all those previous lows. So let's just go to the last. Let's just go to the last low point.
Someone in the waiting room that has come up.
Yeah, I've updated them. So go to the last previous low point. The last low.
That's before this one.
Yes, the last low.
This one.
No. You know when the market was trending down, the last low, what for today?
The market was trending.
That one, yes. Yes. Yeah. So what's that low point?
1.194.
1794, yes. So let's draw the line. Oh, sorry, put your cursor in the body of that candlestick. Yeah, there you go. And yes, yeah. So 1.1794. So draw your line, 1794.
Okay, but below there's no. Am I right in saying that?
Sorry?
So below, the market below hasn't. When the market forms resistance, I can't see the same for the market trending down. I don't know if that makes any sense or it doesn't really matter. So up, we knew that we had 2 points that were kind of like similar in.
Yes. So there, all you're just doing there is just marking the low. That's all. It hasn't formed the market support or anything. It's just the low.
Okay.
Of the side. Okay. It's just the low of the sideways trend. But that's another good point you raise. As a trader, just describe what you see. So all we just have there is the low, period. We don't see anything else. So you can just right click and label the line and the parameters. So 1794. 1794. Low, okay, then parameters.
That's one.
Yeah, 1794.
Good.
No. I was like,
one.
Yeah, it's 179486. Remove the 86. I'm pedantic with that because they could potentially be entry points. So I'm always very pedantic with making sure the numbers are perfect. Because close. Now, so that's just the low of the sideways trend, of the potential sideways trend now, because that's the lowest the market has been so far. and we've got to the highest the market has been so far. So it's now trending sideways between those two white lines. Well, like you rightly said, the lower line is just a market support. Sorry, it's just a market low. It's just the low of the market, period, no more, no less. But yes, the high point of the sideways trend has formed the market resistance. And again, the reason why I'm always particular about the figures, because with the market resistance, you can now potentially use as an entry point, and you can then see clearly the line that you've marked out is 1.1812. So if you want to use as an entry point, you can now see, you can easily place your order 2 pips above that. So will you use the market resistance to trade now?
We can't even trade now until 10 o'clock.
Well done. That's why I was going to trip you up. I thought you might have forgotten about that. That's well done. Well, I told you you're a professional. A professional now. Well done. Because I thought because you had backed out the sideways trade, you might get excited, forget about the report coming out at 10, go and place your order there now, which is wrong. So well done. Well done. Well done. So, but potentially, like you rightly said, come 10 o'clock, if the market hasn't broken that market resistance, you could then use it as a potential entry point. But yes, you can use it now.
Okay. Sorry, I had one question, Dr. Remy.
Yeah.
So, you know, this week now that we're kind of just anticipating, I said this before, does that mean that like all the other markets, like when the euro is, can we not trade any other market? So I know that we would normally stick to euro US dollar, but for season traders that have like other markets that they would, does that mean that it would affect all those markets?
No, it wouldn't. So you're right. That's another good question. So for example, now the euro. Okay, let's start from the other one. Let me just clear one out of the way. As we all know, reports out of the US affects all markets. All markets are affected by reports out of the US. So that one is let's get that one out of the way. Now, but for other markets, not necessarily. So for this ECB report, it's largely just going to affect the euro area directly. It might affect other markets indirectly, but not directly. So yes, if you're trading, for example, dollar yen, maybe pound, Swiss franc, maybe New Zealand dollar, yes, you don't need to be extra cautious leading up to Thursday, no. It's just mainly if you have euro in the currency pair you're trading, then that's the other one you need to be extremely cautious prior to Thursday. But for the other ones, no. Yeah, so that's a good question. Now, if it was USA, so for example, I mean, the good thing is that we're all trading together now. And we will see as time goes on. But for example, when the US is going to announce the interest rate decision, it usually comes out on a Wednesday evening. When the US is going to announce that their own interest rate decision, then yes, you then have to now be careful with all of the currency pairs you're trading because it's the US interest rates, but not necessarily with the ECB. Well done. Oh, before you go, let's go to D1, your daily time frame. Let's do the swing trade. Have you been doing the swing trade?
No.
No, okay, that's okay. I'll do that then. I'll do that. But well done, Tolu. You've done an awesome job. I have nothing to add to what you've done with your day trading. You've been perfect. So, oh, before I go back to M5. Okay. Go back to M5. Let me see. So let's assume this is 10 o'clock now and the whatever report is coming out. I can't remember the GDP. Okay. Let's assume this is now 10 o'clock and this is exactly what you see. Where can you potentially sell?
It's actually a very good question because, and I don't know, but I'll just tell you what my answer is.
Yeah.
So I can see that this is, so the market has broken this. There's no way I'm able to place a trade and to place a trade. So I don't think I would. This if the only thing.
Yeah, not ifs, not ifs or buts. This is what you see.
Okay. If this is what I.
Yeah.
Then I can't place a sell trade, because the only other leverage I have would not leverage, but yeah, I can't place a trade with S2, so I can't place a trade. Basically, I can't place a sell trade.
Well done. That's the answer.
Okay.
Well done.
Okay.
So yes, that is the answer, because like I said, if there are no opportunities, there are no opportunities. Don't manufacture an opportunity.
Okay.
And like I said, I just saw Lillian's question. The low line is just the low line of the sideways trade. It's not an entry point. Now, if the market falls and forms a market support, then yes, you could potentially use a market support to sell, but it has not formed the market support. It has only formed the market resistance. So the only, like Tolu correctly said, our professional, in fact, you'll be doing the Tuesday morning sessions. I can retire. So as Tolu rightly said, the only opportunity now is to buy above the market resistance, because the market has formed the market resistance, but it has not formed a market support. That white line is just demarcating the low part of the sideways trend only, nothing else for now. Well done, Tolu.
Thank you so much, Dr. Ravi.
Pleasure. Awesome job.
Thank you.
So let me just quickly do the swing trade, and we will end the session. I'll take questions. Sorry, I won't end it. We'll take questions after that. So well done, Tolu.
Thank you, sir.
Pleasure. Right, so this is a swing trade. For those who have been trading together for 2 months now, those from the previous course, we can see we've been chasing this swing trade for almost 2 months, but you can see the market is now getting close to the moving average. But again, this is the thing about swing trading. It can take a while to get there. You just have to be patient. You can see the market is getting close, but it's still not broken it, but it's getting close. And it might just shoot back up and start going up again, especially after the interest rate decision. But you just have to be patient with swing trading. So again, as usual with swing trading, you just check. We're using D1, the daily time frame. So we just put a cursor over today's candlestick. Check the moving average. It's 1745 today. So I'll just adjust my pen in order to 2 pips below that at 1743. And 100 pips stop loss, so it'll be 1843. And that's all I have to do for swing trading until tomorrow, until the market takes that order. So that's it for the swing trade. Let me just quickly, let me just quickly go back to, of course, what you see here is the stop loss from the swing trade. So that's the swing trade order that is just showing up on the 5-minute time frame too. I just want to quickly do what Tolu has done so that I can also update you guys later on the platform when we get close to the report. So I'm just doing exactly what Tolu did. So I'm learning from Tolu. I'm learning from Tolu. Tolu taught me all this morning. So thank you, Tolu. Okay, so I'm just getting...
My head is so little. I learned from you as well, so thank you.
Pleasure. So I'm all set for today. Okay, so we finished more or less. So if you need to get to work and go off, you can go off. I'll just quickly go through the question box. Why are we ignoring German inflation reports? Like I said, we're not on the day of the reports. You shouldn't trade before the German inflation on the day of the report, because yes, Germany is the powerhouse in Europe. They're the major powerhouse in Europe. So on that day, you don't want to trade before the German inflation rate. But it will not affect us trading today, like the European Central Bank report. Lillian, sorry, ignore the above. Okay. Okay, so I've sort of answered your questions, Lillian. Any more questions before we all go for breakfast? Again, remember, I've set up the session for, what day is it now? Thursday. So we're going to trade the European Central Bank report together on Thursday. The event has been set up on the platform, so hopefully we'll trade together on Thursday. I'll definitely make sure I don't miss that session. I'll make sure my fellow traders in the village in Rwanda, we don't go there on Thursday. I will make sure that that time slot is protected and we will meet together on Thursday. Okay, so good. If there are no questions, I wish you all a very good day. Enjoy your day, and we'll catch up on the platform. Take care, everyone. God bless.